Hi there, I'm Lindsay Biscaya. Welcome to Market Call. Javed Mirza is on the show today. He's a quantitative technical strategist from Raymond James, and he'll be taking your questions on technical analysis. You can call us toll-free, 1-855-326-6266, or you can send us an email to marketcall@bnnbloomberg.ca. And Javed joins us in studio. It's great to have you.
Thanks for having me, Lindsay. Nice to chat with you today.
Yeah. So we'll start with a little chat, just kind of a broader chat about the markets in general. You say there's a new short-term corrective phase that's happening right now. What do you mean by that?
So indices have run up quite sharply over the last, since I would say the March 30th low. And what we're seeing is a little working off of the overbought conditions. Semiconductors, especially amongst our clients, have been of interest given the sharp move they have. So what we're seeing here is underneath the surface, a lot of areas of the market have consolidated. But now, today, as we speak, it looks like the market's attempting to reaccelerate. We're seeing discretionary rally, industrials as well. So some of the more risk-on areas of the market that have been under pressure, call it, for the last week or so. So stepping back beyond this short-term correction, we're very constructive. We think a broader intermediate-term 3 to 6 month rally phase is underway. That should take us by time into July.
You say this is a good opportunity for investors to add cyclical exposure.
Exactly. So discretionary, industrials, some of the more risk-on areas of the market. In our view, we're in a new 4-year cycle. Essentially, it's a 3 to 5 year cyclical bull market.
Okay.
It's a version, I'm sure everyone knows, like the business cycle where you have kind of boom and bust. We're in the expansion phase. And we think this boom or the expansion phase of the 4-year cycle should take us sometime into, call it, middle of next year.
And that's regardless of what happens geopolitically. Like, it seems it's harder to predict what's going to happen day to day in this day and age. Is that still kind of the case with these cycles? You feel like they're going to continue despite all the unknown geopolitical risks? It's
a great question. It's something we talk to clients a lot about, because with information flowing faster. So if you go back all the way to World War II, these cycles used to operate almost like clockwork. Every 4 years, you get this major low. Now, because information is flowing faster, these cycles are truncating. And to your point, any kind of really large geopolitical event, like what we saw with the conflict in West Asia, that of course is going to raise energy prices. I think there's going to be some knock-on effects that we're going to see later this summer. So 100% they lead to this dislocation. But, we'll react as we see fit. We were definitely very concerned as we moved through the conflict towards the end of March, but markets have repaired themselves. And from our longer-term cycle work, it looks like they're back on track. And
you say as well, just before we go to break, like you've been talking to clients about this quite a bit. So that is probably a concern and a fear that people have.
And
it's uncertainty.
100%. And it's a fear that we had as well, because what we saw in March was the 3 strongest sectors, or 3 of the top 4 performing sectors, were energy, materials, and staples. And those are typically phase 3 plays. It's what we call the exciting end. And that's typically when the market starts to peak out. But luckily, we've regained that more cyclical bullish footing. We've seen information technology and industrials regain pole position. So for right now, things look positive, but you're right. Like these shocks, it's just one tweet and one event, and then we're back in the soup.
Yeah, it's pretty crazy. Okay, we're going to take a quick break right now. We'll be back, though, with Javed Mirza of Raymond James taking your questions on technical analysis. Here's how you can reach us. We'll be back in a moment. Welcome back to Market Call, joined in studio by Javed Mirza today, taking your questions. And we're going to start with an email question. This one's coming from Diana, and it reads, what is your guest's outlook on Apple? Short and sweet. So we'll talk about the company. What do you think about Apple right now, particularly after earnings?
Yeah, so Apple looks really constructive. We've been highlighting this to clients and in calls with our retail team. We've had this bigger downtrend. We've broken out of it. It's a long-term leader. And if you take a look at the longer-term chart, especially, thanks for pulling that up, guys, is we've broken out to new highs. So hardware has been outperforming software, and this is one of the showcase examples. Continues to work, like everything about it technically. We like it, so we don't mind adding here.
You don't mind that? Are you worried? Because obviously there's a lot of investors that are worried about overspending with a lot of these big companies.
Yeah.
Concern for you?
Yeah, it's a great question. It is, I think, a longer term concern. I think at some point we do have to have that conversation about this AI bubble. I think what we are seeing is we're heading into a framework that is very similar to what we saw in 2000. At that point, it was a hardware bubble with some of the names we see now, like Cisco. But what we're seeing now is instead it's a AI software. All the money is flowing in there, and humans always overreact to the upside and to the downside. So I think we're definitely seeing this overreaction to the upside, but it takes time to play out, and we'll have a better idea once the market and stocks come under pressure. But for right now, they're working, and we're trend and momentum based, so we like it.
Okay, back to, we're going to go to the phone lines now, actually. This is a caller. Rob is calling in from Calgary with a question. Hi, Rob.
Hi, thanks for taking my call. I've had Kraken Robotics on my watch list, and I'm thinking of legging in. Can I get Javed's opinion on this stock, and if he thinks it's a buy current levels, or would he wait for a pullback? Thanks again, and have a good afternoon.
Okay, thanks, Rob.
Hey, Rob. Thanks so much for the question. Yeah, I think it's already started to stabilize here. We've already had a pullback. So I don't mind adding here. Our view is we've got a rally into July here by equity markets. Then we should see a correction that potentially takes us into, call it the fall, maybe September, October. And then after that, we have one last push higher that takes us through into, call it early mid 2027. So I don't mind, continuing to be long and strong this stock, and then early mid next year is where I'd start to reduce exposure a bit. So long story short, definitely don't mind buying here. We think there's an up leg into at least July, and then after that correction in the fall, I think we've got another up leg into early 2027.
Okay, back to the phone lines. Tyler's calling in from Toronto with a question. Hi, Tyler.
Hi, Lindsay. Hi, Javed. Thanks for this. Javed, I want to get your opinion on Nutrien. And it's a specific question about Nutrien, but a more general question about stocks or sectors that might be in, let's call it a new paradigm, because what's happening in the Middle East, it's causing inflation that's rippling through to the economy. Things like companies like Nutrien and their inputs are probably going to see conditions that elevate their prices and probably improve their bottom line and the stock price. Yet, because of what happened 6 months ago, the share price seemed to have a ceiling of $85-ish. That probably doesn't apply anymore. So I'm wondering if some metrics might be skewed to the downside. I'm thinking that 200-day moving average or the 40-week, probably a little low because 6 months ago it was a lot lower than it is now. Mm-hmm. When you're analyzing companies right now that are in a new paradigm, are you inclined to alter your analyses or make any adjustments to your calculations to reflect this new world that we're in? And how does Nutrien look right now? Thanks.
Great question, Tyler. So it is something we are looking at, but ultimately the bottom line is whatever is working in this new paradigm, it should be reflected in the charts. So ultimately the chart's just showing us where investor preference is. And so we do like Nutrien. It's covered by Steve Hansen, on the fundamental side here at Raymond James. We do like it. We recently highlighted it as one of our top picks for Q2, actually. And I don't know, can we pull up DBA? It's an ETF. I'm not sure if we can, because then I can kind of delve into the story.
Checking that for you right now, see if we can pull that up.
Yeah, so ultimately, I'll give you the background. DBA is an agriculture ETF. And so I'll just draw.
We don't have the chart, actually. So yeah, maybe just give us.
I'll give you an example. So basically, it's kind of based, and now it's accelerating. So to Tyler's point in question, with the underlying shift towards a more inflationary environment, and we're seeing this bigger shift away from paper assets toward hard assets, which should be very beneficial for Canada in general, because we've got energy, we've got copper, rare earth minerals, gold, silver. So with Nutrien as well, I think it should benefit from this paradigm. And so we have seen, can we pull up a longer term chart, maybe 5 or 6 years? And 5 years would be great. What I want to show the viewers is just this shift that I think is a great example of what we're seeing. So this to me is a perfect example. So here's 2022. Here's this bigger, longer-term downtrend, and then 2025, now we've got this sea change, and I think that's exactly what Tyler was referring to, and that's what we're seeing here in the charts as well. So do like this new longer-term uptrend, We recommended this to clients as one of our Q2 picks. It's been under pressure here, but generally speaking, we continue to like this longer-term uptrend that we're in. So we like it.
Okay, back to the phone lines. Daniel's calling in from Markham, Ontario with a question. Hi, Daniel. What's your question?
Hi, Lindsay. Hi, Javed. Great host as usual. May I have your technical analysis on Athabasca oil? What price do you see an entry point to buy it? And would you wait for a bigger pullback for a better entry point? And also, Javed, best technical analyst on market call. Thank you.
Thank you for that. Okay, Athabasca oil. Wow, look at that chart. Thoughts on that over the last couple of years?
Yeah, so we've actually, I think we recommended this as one of our best ideas last year. So what I would say is obviously very positive uptrend. It is under pressure here, as you guys can see. I think what we'll see is, if we're correct, I think we should see a risk-on rally into July. I think we'll see crude and energy in general come under pressure. We do like natural gas. Hopefully we'll get a chance to talk about that later. But I do think we'll see some of these energy stocks that have been up on a stick in the more oil areas come under pressure, consolidate. But if we're correct, and we're just using July as a general timeline, obviously every week we update clients and they get a better idea. But let's say July is the timeline where markets start to come under pressure. I think that would likely be in conjunction with oil starting to rally again. And at that point, so I'd be using weakness here over the next month or two to add exposure to energy names. And especially if we can pull up another 5 or 6 year chart, what I really want to show is, and this is one of the reasons I'm so bullish on Canada, is because we're seeing a lot of these bigger
Canadian energy, you mean,
Canadian energy, yeah. So here's, and especially over the last couple of years, we had this sideways base. And I'm going to foreshadow one of my picks for this year. It's really going to encapsulate, or for the segment here, it's really going to encapsulate this. So do like it. They have been up on a stick, and we are looking for a pullback here. So to answer Daniel's question, use weakness over the next month or two to add exposure. We do think ultimately, longer term, we're in a new secular uptrend for hard assets that's going to benefit Canada and energy.
Interesting. Okay, we'll talk about that a little later in the show, of course. We're going to take a quick break right now. We will be back, though, with Javed Mirza of Raymond James, taking your questions on technical analysis right after this. Here's how you can reach us. We'll be right back. Welcome back to Market Call. Lots of questions coming in for Javed, so we'll get right to it, starting with an email question. So we'll go to the inbox. This is from Dan, and it says, could you possibly comment on the direction you believe Constellation Software will go in the coming months? So we've been talking about these kind of cyclical natures of things. What are your thoughts on Constellation Software in particular?
So it's funny because literally I was talking to one of our sales guys, JP, about this. I think he's watching the show right now, actually.
Shout out to JP.
Yeah, shout out to JP. So here's what I would say is we're in this bigger downtrend here. We are trying to stabilize. And actually it was this morning we were talking about golds, because we put a note yesterday about golds, telling clients, look, it's broken below a key level. We think there's weakness, seasonal weakness, historically in May and June for gold stocks. And so the question was being asked about software. And what I wanted to highlight is hardware is working, but software is in this downtrend. So what I want to highlight is definitely a tradable bounce, but we'd rather be late and catch that bigger uptrend. It's exactly that chart we highlighted with Nutrien. We'd rather be a little bit late because what we're worried about is another bounce and then another leg lower. So these, for us, we have our proprietary model, software model, we call it the TRIP. And what it does is it puts every stock into one of 4 different quadrants. And right now, all the software stocks in Canada and the US, they're in quadrant 4, which is essentially the penalty box. They're in a downtrend and they're heading lower. But what we're seeing is on the weekly charts, they're bottoming. So it's positive. You're seeing early signs of a bottom, but we would rather be a little bit late and see signs of a bigger bottom and catch that trend, because right now it's a little bit like catching falling knives. So you can get lucky, but we'd rather be a little bit late. So that's kind of, it's all the software stocks are going to look like this. So Adobe, Gib, like CGI Group, Descartes, a lot of these are going to look like this. Now, obviously, there are going to be names that turn around that are fundamental winners, but for right now, a lot of them have the same profile, which for us is tread carefully.
Just not sure at the moment who's going to be winners and who's going to be losers out of this race, right?
You nailed it. And so, Lindsay, I'd rather just wait, and then once we see that turn, then I'd add on.
Got it. Okay, we're going to go back to the phone lines now. Alan is calling in from Victoria, BC with a question. Hi there, what's your question?
Hello. Thanks for taking my call, Javed. My question is on Exchange Income Corporation. I know that your company follows it. I hear Steve Hansen a lot. And I'm a long-term holder, and I always buy the dips, and it's done very well that way by doing that. And what's going forward? What's the stock look like going forward? Thanks very much.
Okay, thank you.
Great question, Alan. So what I would say, as you alluded to, Steve Hansen, he covers it fundamentally. He does a great job highlighting all the intricacies of the name. What we would highlight technically, I think we highlighted it last year that it was quite positive. Continues to work. Obviously, a lot of fundamental catalysts driving this name higher. It's accelerating here. We like it longer term. We are very bullish Canada. I think, to your point in our discussion earlier, Lindsay, about what's going on in terms of geopolitics, if Canada can remain neutral, if we can trade with the world and we have all the resources, I think we're in such an amazing spot. And so this is another example of, names here in Canada that continue to work, that have a bright future and that we like. So.
Alan said he likes to buy on the dip, though.
Yeah, so
maybe not the moment to do that.
The dip happened here, and I think it's reaccelerating. Right. So, great point. What I would say is, if you don't want to chase it, I think there'll be a correction, likely July, August. That's where I would add again.
Got it. Okay, we're going to go back to the phone lines now. Nizar is calling in from Toronto with a question. Hi there. What's your question?
Oh, hi, Lindsay. Good to see you, Javed. May I have your technical opinion on Bank of Nova Scotia, please? I just heard your comments. You expect a short-term correction. If so, would you sell BNS and go back in again? Also, for a simple technical analysis, can one use a 50-day or 200-day moving average? Thanks for taking my call.
Okay, thanks for that. So Scotiabank, we'll start with the first part, which is would you keep it right now? Would you buy it? Would you sell it and buy back?
I would just hold it. We're very bullish on Canada. I think there's going to be a dip coming. The banks have run quite nicely. I think if I recall correctly, Steve Boland, he covers these names here in Toronto for us for the banks. I think he has it as one of his preferred banks. And so it continues to look great. All the banks look great. I wouldn't, I'd let it run. I think there's going to be a correction around the July timeframe. That's where I'd be looking to add exposure. In terms of actually reducing a little bit more significantly, I think there's a bigger correction coming next year, and that's where I would seriously consider maybe trimming 5 or 10%. But ultimately, the banks are long-term holds. They look great, continue to work.
Correction for the banks, like a bigger correction next year, or
just the market in general.
Got it. Okay. All right. Back to the phone lines now. John is calling in from Oshawa, Ontario, with a question. Hi, John.
Hi. Thank you for taking my call, Javed. My question is on story of today is Nvidia. What do you see? Technical analysis on that, please, on today as well as long term. Are you holding Nvidia? Thank you. I will listen to your answer. Thank you so much.
Thank you very much. Yeah, Nvidia reporting after the bell today. Thoughts on the company right now?
Yeah, John, great question. So here's that previous base that Nvidia was in, and then you see this bigger breakout. We're seeing the same thing here. Here's a base. Here's a breakout. The earnings days are the one day we have absolutely, that's a total black box for us, so we have no idea what's going to happen. I think Nvidia is covered in the U.S. by our U.S. analyst, Simon Leopold. And what I would highlight here is it's had a good move. I have no idea what's going to happen with earnings. That's a coin flip, and so we obviously stay away from that. So you could either see a corrective phase back to this breakout level, or you could see another push higher. I don't know which one of these two ways is going to go, but what I can say is longer term chart continues to work. We'd be looking to add on weakness. So if it does run here, I'll give you the two scenarios. Positive, earnings continues to run. I prefer not to chase, then I'd wait for that correction sometime this late summer, early fall. However, if it does pull back, I don't mind adding a little bit because I do think it will try to reaccelerate, but then you'll get another window, call it July, August, September.
So you have some opportunities either way.
100%.
Okay, we're going to take another quick break right now. When we return, we'll take a look at some of Javed's past picks. Stay with us. Okay, time now for past picks with Javed Mirza. These date back to June 5th of 2025. First one is Lundin Mining, so recommended at $14.41. It's now at $37.43, so 160% total return. You still holding this one?
Yeah, I still like copper. I think there's another move higher into next year. These names are a bit extended here. We actually have a copper conference in early June, so we'll be talking to clients about this and copper names in more detail. What I would highlight here is we're a big fan of the commitment of trader data. So it comes out of the Chicago Board of Trade every Friday at 3:30. You can actually go on the website and download it. But what it shows is smart money positioning. That's the commercial hedgers, the producers versus hedge funds. And right now, the smart money has been selling copper. So I think that's telling us there's likely a pullback here due shortly in copper. So I don't mind trimming here. We had a really strong return, so yeah. Because
it does seem like the price of copper just overall has been going down recently, right?
It has, and if we pull up copper, I don't know if we can, and I don't know if within the time constraints if we can do it, but you can see it's had perfect.
Coming up, yeah. Just especially over the last couple of days, I've noticed it's been dropping quite a bit.
Yeah, well, materials in general have been slammed.
Yeah, and it's always interesting to see how that affects specific companies. But yeah, there's copper.
Yeah, so there's copper, big move, but from what we're seeing, smart money is short, and typically when it's short is around these peaks. So I think there's near-term pullback, but the key takeaway is this longer-term uptrend remains intact. So yeah.
Okay, we'll move on to your next past pick. This is Nuvista Energy. So recommended at $14.14. Just very similar to the last one. Now it's at $19.
I only recommend stocks at $14.
Total return of 35%.
Yeah.
What about Nuvista Energy? You still like this one?
Well, I think it got taken out. So we liked, I'm going to foreshadow, we're going to talk about another natural gas name, which I like. So we'll talk about that. But look, we like the technical profile. I think it's now off the board. So it is what it is. So we got forced to take profits on this. So yeah, happy with this call.
And you're going to keep holding this, like again, as we were talking about, I know we're going to talk about that later as well. If you expect some dips, which you do.
Well, I think this name got taken out. So this is.
I see.
Yeah. So this is gone, but. We will talk about that other name.
Yes, we'll talk about it.
So we'll put a pin in it and talk about that one because it's actually the same setup and the same background.
Okay, all right, yeah.
Except it's not $14.
We'll talk about that. Yeah, it's not $14. Yeah, okay. And this last one is not $14 either. So Russell Metals recommended at $42.58. Now it's at $58. So return of 36%, total return of 39%. Thoughts on Russell Metals moving forward?
Yeah, so this is covered by Fred Bastian, our analyst out in Vancouver. He does a lot of the infrastructure and construction and engineering. He's had a great call on this. So here is this sideways base. I think we recommended it in June of last year, right? So the reason we recommended it, and you have to remember at that point in time, things were quite sketchy. It was right after the tariff tantrum.
Yeah.
There was a lot of uncertainty. I think we had already gone through a round of conflict in West Asia, maybe as well. But we like the longer term setup. And part of this bigger backdrop, which is that question Tyler asked earlier, is about this hard asset shift. And so Russell Metals, steel used, especially with all the infrastructure we're seeing built out. It's funny because we were talking in between about my train ride here from Union and all the construction, but you can see there's so much building going on. And so Russell should be a beneficiary of the build out here of Canada. So I like it, really positive chart. It's extended here. I'd prefer to wait for weakness, but yeah.
And you feel like any trouble that might be associated with tariffs? Maybe in the rear view window?
Yeah, and either way, I think what we have to do is start to create our own nation and our own trading partners and not be as reliant on the South, which is, I think, what's happening. So build out Canada, trade with Europe, trade with Asia, trade with Latin America, and just, I think it's positive. I think what the president south of the border did is I think he just accelerated changes that were coming anyways.
Interesting stuff. Okay, so we're going to take a quick break right now. After those past picks, we'll be back with Javed Mirza of Raymond James taking your questions on technical analysis right after this. Stay with us. Welcome back to Market Call. We're going to go straight to the phone lines. John is calling in from London, Ontario, with a question for Javed. Hi, John. What's your question?
Good to see you, Lindsay, and my compliments to your tailor. Hello, Javed. My question's on Micron, one of the memory chip makers. 4 of the 5 top stocks in the S&P 500 are memory chip makers, and there seems to be insatiable demand for this product. I wonder if you could tell me, does Micron have another leg in it? Its profit is doubling almost every quarter. Thanks very much.
Okay, thanks for that. What do you think?
John, great question. So we actually put out a note on Monday highlighting key levels on all these names. They continue to work. They are a bit extended here, so I do like them overall. If you already own them, maybe you can trim a little bit. I am looking at a bit of a consolidation phase here in these guys. Overall, positive technical profile. They've just been up on a stick. So I don't really want to chase them here. I prefer to wait for weakness. If you already own them, maybe you can trim a tiny bit, and that's what we've been talking to the clients about. They continue to work, but they're extended, so I'd prefer to wait for a pullback to add more exposure.
Okay, we're going to go back to the phone lines. Jim is calling in from Peace River, Alberta, with a question. Hi, Jim. What's your question?
Good morning. Earlier this morning, one of the guests on BNN News said we're in the bottom of the first inning of a global commodity expansion type of thing. Where do you see a company like Whitecap 3 to 5 years from now? Thank you very much. Bye.
Thanks for that. Yes, I remember that analogy.
Yeah.
What do you think about that and Whitecap in particular?
Yeah, so great question. And what I would highlight from Jim is that what we were talking about earlier on the show, just about Nutrien, just about all of this commodity complex taking off. So maybe if we can get a longer term chart here on Whitecap, maybe 8 or 10 years even, just to really kind of put this into perspective for everyone watching. Yeah, perfect. So here was, oil, and maybe, I don't know, can we even go out 20 years maybe? That's as far, okay, perfect. So what happened was oil, we had the peak back in, call it 2008, 2009, where we got to, I think, 150 on crude. And then since then, oil stocks have been under pressure. This was where crude went to zero. Remember, you had to pay for the storage during COVID for the oil at sea.
Yeah.
And then this was the major low. And then here you had a move higher. This was partially predicated on the Russia-Ukraine conflict. But the big thing I really want to flag for everyone to hear is a lot of these energy stocks from 2022 to 2025 were in this multi-year trading range. And now we've got a bigger breakout. So this is all positive. I do think at some point, maybe it's second half of next year, I think we're going to enter into another consolidation phase. But ultimately, we see these 3 to 5 year cycles. And I think we're in the midst of one right now. I think when we see that corrective phase is going to be a great opportunity to add more exposure. But ultimately, we think that we're in this new commodity cycle probably for another, call it 5 to 7 years. And that's going to be very bullish for energy in general. But that's the positive aspects. You don't hear about the negative aspects, which is wait till you see the cost of filling up your tank and inflation. And the other problem is to combat this rising inflation, you're going to see the central banks increase interest rates, which means you're going to get more money in your checking and savings account. But instead of investing in equity markets, people are going to be like, hey, I can get 7 or 8% in a checking account. Yeah. And that is going to lead to what we call a secular bear market. Can we pull up the S&P 500, like a long-term chart? Is that possible?
And this is all, when we see, not when, I guess you should say if we see interest rate hikes in the future, which is becoming more of
which is what we think.
What you're
and that's been our longer-term call too. So Can we go 20-year or 30-year, whatever, however far we can go, and I can kind of walk everyone through where I think we're headed. So I think we're headed to a period that we saw from 1970 to 1980, like stagflation. We had multiple wars in West Asia. So here's what I'll draw. So if we come back here, this was 2000, that was the tech bubble. And then essentially you kind of had this bigger, longer term sideways trading range. I think ultimately, either at the end of this cycle or the cycle after that, we're going to see the same thing. We're in this bigger sideways trading range. But what I would highlight though is this is the S&P 500. And so this is going to be information technology, global growth. This is what's really going to suffer, but something like the TSX, which is resource driven, is going to benefit. So there's always a bull market somewhere, and money is always chasing it. And I think that's ultimately where it's headed. So over the last 15 years, the money has been in the S&P 500 because interest rates have been low, global growth, all the big mega cap tech, Amazon, Google, Meta. So that's what's been chasing it, but I think we're coming to the end of the rainbow here, and they're not going to find a pot of gold.
Wow, very interesting. All right, we're going to go back to the phone lines now. Lorna is calling in from Deer Lake, Newfoundland, with a question for us. Hi, Lorna. What's your question?
Hi. I have a question on AT&T. Thank you for taking my call. I would like Jared's analyst on AT&T, and if he thinks this is a good entry point to take a position for a long-term hold, I'll hang up and listen to your answer.
Okay, thanks for that.
Can we pull up a longer-term chart on this, maybe 10 years if possible?
Looks like even since 2025, it's going into a bit of a dip right now, but I guess we'll see with the longer-term chart.
Yeah, so here's been the longer-term downtrend. It is trying to turn around, just like Verizon. So I do like this new longer-term uptrend. I don't mind nibbling here. So what I would say is, Lorna, I don't mind adding here. However, can we pull up a one-year chart, and I'll kind of give her some risk control levels.
Yeah, just waiting for that chart.
Perfect. So as long as we don't take out these lows here, I'm constructive. So I don't mind nibbling here. And then if we take out the highs here, that's constructive. So let's say we get to 2650, then I would add more. But this is kind of my key risk control, call it around 23. If we take that out, that's a lower low, that's negative. And we are sort of seeing a lower high. The problem with a lot of these telco companies is if we're correct that interest rates are increasing, it's going to be challenging for their debt because a lot of these guys have higher capital costs. So I did want to flag that. Now, what I would say is, and what we've been telling clients is, and this is going to be, you're going to see something similar with some of the plain vanilla utilities, but for energy, a lot of these stocks pay pretty high dividends. The energy stocks, they've cleaned up their balance sheets, and you've got inflation protection. So if inflation rises because you're tied to the price of oil, it's going to benefit those. So for a lot of these more stable dividend paying companies, and I'm assuming that's why Lorna wants this, I'd really be looking at adding like an Enbridge or a TRAP, something, same thing like these pipelines where you get that high dividend yield, but you also get that inflation protection.
Because AT&T at about 4.4% right now for dividend. Is that something that you think is important to a lot of investors at the moment?
I think it's going to become increasingly more important, especially once we come into a period where growth really starts to fall flat.
Yeah.
And then we come into a period where there's low returns. And one of the ways you're going to generate those returns is dividends.
Got it. Okay, we're going to take a quick break right now. We will be back with Javed Mirza of Raymond James taking your questions on technical analysis right after this. Here's how you can reach us. Welcome back to Market Call, joined in studio by Javed Mirza. Today, answering your questions. Going to go straight to the phone lines. Yuli is calling in from Collingwood, Ontario, with a question. Hi, Yuli. What's your question?
Thank you for taking my call. I'd like your opinion on Cameco and whether or not it's making a transition from just mining and processing ore into the upper streams of nuclear energy. Thank you.
Okay, thank you so much for that. So thoughts on Cameco, the direction the company is taking? What do you think?
So that I don't know. Our fundamental analyst, Brian MacArthur, does a great job of digging into the nitty gritty on the underlying fundamental aspects of the name. What I would highlight here, though, it's in a longer term uptrend. We actually highlighted it recently right here Unfortunately, that was not great timing because it's pulled back since then. So we closed out that idea. It's coming into support. My only concern is we've seen the materials in general come under pressure. And as we were talking about gold before, May and June, historically poor seasonality. Copper, smart money is short. My impression that I get going through all the charts and just kind of reading the tea leaves is I think we'll see some more weakness in a lot of the material names. I do like them longer term, but I think it's going to be kind of a choppy, next couple of weeks, call it 4 to 6 weeks for them. So I would use that as an opportunity to add exposure longer term. Definitely like the uranium story, and there's other names here in Canada, Denison, NextGen as well. But generally speaking, right now, under pressure, I do think there's going to be a little bit more weakness. So I'd be using that weakness over the next couple of weeks to add exposure.
Okay. We're going to go back to the phone lines. Anita's calling in from Markham, Ontario with a question. Hi there. What's your question?
Hi, good afternoon. Thank you for taking my call. My question is on RTX. I own some now, and I would like to know whether I should continue holding on to them or sell them and go elsewhere. I would love to have Javed's opinion on this, please.
Okay. Thanks, Anita.
Great question, Anita. So here's what I would highlight. Longer-term uptrend remains intact. So a lot of the defense stocks sold off sharply ever since we got the ceasefire, understandably. So we'll see what happens. They've had a really strong move. We're actually watching these very closely. The reason is they've been leadership here really since we started to get going back in 2025, even through 2024. I think there's more attributed to the Russia-Ukraine conflict. But if we continue to see these names weaken and come under pressure, I think that's going to be the first warning shot across the bow that we're seeing a rotation out of previous leadership and that it is breaking down. So as you go through the broader market cycle, I'm just going to draw it here for you. You'll see some of the previous leaders start to weaken, and then you'll see that money rotate to some other areas of the market. But this is typically the first warning sign that we're getting closer to that peak, which actually does line up with our bigger call that, hey, look, we think the next bigger market peak is coming at some point next year. So to answer Anita's question, long-term continues to work. If it does break down, maybe we could get a 1-year chart, and then I can give her the same kind of tactical level of detail. Perfect. So if it breaks below the December lows, that's where I would look to reduce exposure.
Okay. All right. We're going to move on. Gus is calling in from Sarnia, Ontario with a question for Javed. Hi, Gus.
Hi. Thank you for taking my call. My question is on Birchcliff Energy. I've been following these guys for many, many years, and during COVID, I went big on it and Nova Energy. Watched Nova Energy go all the way to, and of course, it got taken out in 19-something. I just don't understand the non-respect that Birchcliff is getting. Management has done exactly what they said they would do. The narrative on the future of natural gas is ridiculously boomish. So what's the deal here? I'll hang up and listen. Thank you very much.
Okay, thank you for that. I know we're going to talk about nat gas more in more detail, but your thoughts on maybe this company specifically.
Yeah, so it's, to Gus's point, I don't disagree with the word he said. Look, here's the good news. We've got a new uptrend in place. We've got higher highs, higher lows. You can see this trend channel. It is trying to reaccelerate here. I do like natural gas, which we'll talk about. Spoiler alert, once we get into our pick, one of our top picks. But the bottom line is I do like the setup on natural gas. Gus, you'll have to hang on because we are going to talk about why we like it. But I don't mind nibbling here. I think there's a catch-up trade. And then if we break out above the highs here late in 2025, I'd add even more exposure.
Okay, we're going to take a quick break right now. When we come back, though, we'll take a look at some of Javed Mirza's new top picks. So stay with us. That's right after this. Join us tomorrow on Market Call. Gordon Reid will be on the show. He is president and CEO at Good Read Investment Counsel, and he'll be taking your questions on U.S. equities. Okay, time now for Javed's top picks. This is one we have been teasing all show long, so we're finally going to get into it. But first, starting with the specific company, Tourmaline Oil. Yeah, so what we wanted to flag here is it's been frustrating for investors. It's been in this longer term base for quite a while. But this, what I'm trying to draw here, not well though, is it's an ascending triangle pattern. So what it is you kind of have this, let's say, resistance around 80.
But at the bottom, this line is rising. So what that's telling you is initially investors are buying, call it around 55, then 60, then 65, and so they're getting more aggressive buying. Long story short, we're seeing a breakout of this range. And if we quickly go to natural gas, what I wanted to highlight here, what Lindsay and I have been
kind of talking. You really are bullish on natural gas.
Yeah, so smart money is long here. So I think we're setting up for a seasonal rally. Maybe we get to the 5 level. In our work, we've been quoting for 470. The smart money is long natural gas here. Typically, when they're long, it sets up nicely for a rally phase. So I'm very constructive. I think.
What's the reason for the rally, though? Like, is this just because there's just more demand for energy and Canadian energy is out of a future?
It's going to be like seasonality. I think maybe they're seeing that we're going to get a really hot summer. Okay. You've heard rumors of this big El Nino coming, so demand for natural gas. The smart money, they really know what's going on. They have all the information. And so when they're long, you really want to pay attention.
Okay, so we'll go on to the next one then. Yep. Intact Financial Corporation is your next top pick. Yeah. What is it that you like about Intact Financial?
Yeah, so it had a good move, and it's been a laggard compared to Manulife, Sun Life, all the rest of the life coast. And recently, we've been watching with bated breath for it to start to turn around, and now it's finally turning around. If you take a look at a very long-term chart, beautiful longer-term chart, and remember, we're having a discussion about interest rates. Life cos in general are beneficiaries of higher interest rates. If interest rates are going to increase, then that should be a tailwind for life cos in general. So really like Intact, it's come right back to what we think is a longer term attractive entry point. Thanks for the chart, guys. This is awesome. And this really kind of helps reinforce our case. So I'd be a buyer here.
Okay. Brookfield Infrastructure is your last top pick. What is it that you like about Brookfield at this point?
Yeah, so Intact also ranked very highly by our fundamental analyst, Steve Bolin here in Toronto, and Brookfield covered by Fred Bastian again. So he likes it. I really like this push higher here. We're in a new uptrend. We actually look like we're poised to challenge and break out to new all-time highs. New all-time highs is very bullish. That was our very bullish Canada thesis. Building out Canada, I'm very bullish Canada, and if we can continue to see Brookfield Infrastructure, which is going to play a big part in that, I think it's going to be a big tailwind. The chart looks awesome. I'd be a buyer.
You're saying for Canada, really what Canada has to do is stay neutral at this point to see that bullish run, that kind of run in all sectors continue?
I think if we respect the rule of law and order, if we treat everyone fairly, and if we trade with the whole world, and if we open up for trade, I think it's Canada. I think it's the best country in the world, and I think it will continue to be.
Is there anything, just because we have a little bit of time left here, so I can pick your brain on this, right? Because I know you were saying that you feel like there's a correction coming for almost all sectors.
Yes.
Is there any area where you're a little more cautious, would maybe stay away from? Particularly in Canada.
In Canada, that's, for right now, for the next 6 weeks, I think it's going to be gold and materials in general. I think it's going to be a greater, longer-term entry point. I think we're going to see risk-on rally through into July, and then I think we're going to see, here's 1 year gold. This is perfect. So I think we have had a really big run.
Yes.
I think we saw the first signs of a pullback. Smart money has been reducing exposure on gold as well. I think maybe we get a pullback to call it 4,200, but that's where I would really be looking to step in and buy hand over fist. Generally speaking, though, I'm pretty constructive Canada.
Because there was a lot of analysts saying they expect gold to kind of reach further than the peak that we saw at the beginning of this year.
Yeah.
Maybe in the long term, but you're just thinking in the next 6 weeks, probably not.
Exactly. And it's funny. That's why it's been so frustrating, because gold had a big run, and then the market always hurts the most amount of people. So everyone who saw gold up on a stick, they bought here. And what happened? They got punished, right?
Yeah, for sure. Okay, this has been so interesting, Javed. Appreciate you coming in studio. Thanks so much.
Thanks for having me, Lindsay.
And thank you for watching Market Call. We will see you next time.